In this video, we'll talk about what is a good credit score in Canada. Let's get started. My name is Mohammed. I'm an owner and founder of MyRate Compass, a personal finance blog dedicated to helping you make informed financial decisions. What is a good credit score in Canada? A credit score is a 3-digit number designed to represent your credit risk, or simply the likelihood that you will pay your bills on time. Your score represents how well you manage credit. In Canada, credit score can range from 300 to 900. The higher your score, the better. Lenders look at your credit score to gauge whether you qualify or not for a loan. Let's talk about credit score ranges. Anything between 760 and 900 is considered excellent. Applicants who have a credit score within this range are most likely to receive the best interest rates and most favorable terms by lenders. Anything between 690 and 759 is considered good. Applicants who have a credit score within this range are likely to be approved for credit at competitive rates. Anything between 660 and 689 is considered fair. Applicants who have a credit score at the lower end of this range may be approved for credit, but likely not at competitive rates. Those at the higher end of the range are likely to get slightly better rates. Anything between 560 and 659 is considered below average. Applicants who have a credit score within this range may be approved for some credits. However, the interest rate will be higher than standard and additional conditions might apply. Let's talk about the last range, anything between 300 and 559. It is considered poor. Applicants who have a credit score within this range will not likely be approved for a credit card. Sometimes people who have this score have been charged off, collection account, they may have default on a loan, bankruptcy, or sometimes even foreclosure. It will be difficult to get approved for any lending product such as a credit card, loan, or line of credit. Your best option will be to look at for a secure credit card or a secure loan. Although different banks and lenders have their own standard for rating credit score, a score of 700 and above is usually good and gives you access to better interest rates in Canada. Now let's talk about how your credit score is calculated. There's little information provided on how credit bureaus calculate credit score. Most credit bureaus consider this information the secret. However, they provide a list of factors that affect your credit ratings. Let's talk about these factors. Number one, payment history. A good record of on-time credit payment will boost your credit rating. Paying late will have a negative impact on your score. Delinquencies also have a similar effect. Number two, they look at utilization and balances. A credit card balance of above 50% of your credit limit will negatively impact your rating. Avoid maxing out your credit limit and aim at balances under 30%. Number three, they look at credit history. You earn more points the longer you have an account open. Avoid closing any old account if you plan on applying for a loan in the future. Number four, they look at credit inquiries. Too many credit inquiries and application in a short time span make it look like you're desperate for financial help. Avoid applying for credit unless you need it. Number five, credit mix. A good combination of different financial products help to make a healthy credit profile. So try a mix of retail store card, personal loans, line of credits, mortgages, instead of sticking only to credit cards. Now let's talk about why is it important to have a good credit score. Your credit score is used by employers, by landlords, by utility companies, insurers to assess your credit behaviors. It is an important aspect of your financial profile because it affects decision when applying for a loan, when applying for a job, when applying for a rental apartment, and when getting insured. Let's talk about how to maintain a good credit score. Always pay your bills on time. That's the number one. Number two, don't close your old credit card. Keep these old accounts to maintain a longer credit history. Number three, limit your application for new credit as it could negatively impact your credit score. Number four, keep your credit card balances low. Your balances should be around 30% of your credit limit. And last point, keep an eye on your credit report and ensure that any errors are corrected, and make sure that you order your credit report from each credit bureau, Equifax and TransUnion at least once per year. I hope this was helpful and gave you a good understanding of what is a good credit score in Canada, how to manage your credit score, and make sure that you have a good financial profile. Thanks and have a great day.